All right, guys, 10 baggers here. I feel like you need 10 bagger at this time. When a lot of craziness in the market, I feel like you need me, and I haven't been there. I'm like that girl that you guys want, but you can't have. But I come in occasionally. It's like the casino. You guys win sometimes. You check if I posted a video, but most of the time you're losing. But you're winning tonight. 10 bagger to the rescue. Okay, let's go. Hopefully you guys like my jokes. Might not be that funny. All right, so I'm going to take a look at the NASDAQ. And as I've been saying, I said in my other video, short the bounces, stay bear. The market is still bear. Remember, I mentioned what's going on over here. The Fed said they were going to start tapering. That is a big deal. And I say that's a big deal because the Fed printer go burr, like everybody says. But if the Fed printer stops going burr, are the markets going to keep going up? And obviously, that's a big concern. That was the narrative for the last year and a half. Fed printer go burr. Now the Fed printer, they were shutting it off. Okay, they were pumping $80 billion a month into corporate bonds, government bonds, treasuries, all kinds of stuff. $80 billion a month, pumping liquidity into the market, keeping interest rates low. Now, not only that, not only do they want to stop doing that, but they also want to start selling the bonds that they bought. They want to start reducing their balance sheet because they owe $8.5 trillion. They got $8.5 trillion worth of bonds on their balance sheet. So they want to start reducing that. So not only do they want to stop throwing money into the market, 80 billion a month, not only do they want to stop that, but they want to pull out at the same time. They have a goal to pull out as well. And then you have this thrown on factor that says inflation's way higher, it's higher than anticipated. Powell said himself now they're expecting inflation to continue into next year. And now they seem to pretty much have no choice but to raise rates. So what do we have over here? We have a situation where everyone knows we're in a massive bubble. Everyone knows that. Tell me, everyone knows we're in a bubble. I'm pretty sure we're in the everything bubble. Everything's in a bubble. Cash is a bubble because governments have so much debt they can't pay. Crypto, come on. I'm quite confident it's a bubble. It's just a digital ID, can be reproduced a million times. I mean, there's so many cryptos, whatever. I don't want to get into it. The stock market looks like a bubble at these levels. The PE ratios are way higher than normal. Everyone knows the house market's a bubble, especially in Canada, Toronto, Vancouver, probably a lot of other places, they say, Australia. So we got massive bubbles everywhere. And now the Fed's going to start pulling liquidity away from the market at a time when businesses took on so much debt, so much cheap money and cheap debt, and a time when, people are still recovering from this pandemic. Heck, a lot of people didn't even recover from the 2008 financial crisis up to this point. That was only 12 years ago. That financially decimated a lot of people. People didn't even recover from that yet. And now they're going to throw on raising rates. So it looks like a recipe for disaster is what I'm saying. It looks like a recipe for disaster. And I've been thinking of this for a long time, and I've always when is this going to come to fruition? What the heck is going on? The market can stay irrational longer than you can stay solvent, right? That's the saying. And it very much seems to be the case. I've been in the market for about 7 years, and it was about 2-3 years in. I was starting to think it was a bubble 2-3 years in, and it probably was at the time. And yet, look at it, in the last 3-4 years, it's gone way up, So we have all these concerns. The market's going down for that reason. The market had a narrative before. Fed printer go burr. Now the Fed printer gets shut off. This is the new narrative. The new narrative is we're raising rates. Inflation is high. We got a ton of debt. We need to reduce our debt. And then we're pulling all this liquidity away from the market. That's the new narrative. And the market's reacting to that. That's why it's going down. And then you also have, I think that's why it's going down anyways. And then you also have, the risk of a government default that they're calling it. And it's like, can the U.S. actually default? Can somebody tell me, can the U.S. actually default? Oh, so, yeah, I guess the answer is yeah. And if that happens, I mean, the U.S. default, what does that mean for the U.S. currency? You know, maybe crypto bulls are like, yes, finally our time. You know, what does that mean for stocks? You know, what does that mean for U.S. treasuries? You know, what does that mean for global equities, for mortgage, all this stuff? There's so many things. Talk about a global reset, right? For anyone who's a conspiracy, talk about a global reset. And they've been talking about it, and a lot of things have changed in the last year and a half, 2 years. A lot of things have changed. You know, a lot of places you can have to walk around with this passport, you know, or you have to get this vaccine. And you see a lot of protests. You see a lot of bad things happening in a lot of countries. You know, people's freedoms are being taken away in some countries. You know, people feel like their rights are being taken away, you know, and it's dividing a lot of people. You know, a lot of people are just fighting over it because some people are for it, some people are against it, you know. I think more people are against the measures they're taking than for it. Vaccine, you know, I don't think that's the issue here is the vaccine. It's the forcing of the vaccine, I think, is more the issue and the concern. Speaking of that, I got one shot myself, and I didn't want to get it because I already had COVID. Like I mentioned, I didn't want to get the shot, but I eventually just decided to get it because I want more freedoms, right? And it's like I'm not getting it for the reason I should be getting it, I guess. But anyway, I don't want to get into it. Let's get into the charts. I'm so sorry. I had to talk to you guys a little bit. There's just so much on my mind. So I had to talk to you guys a little bit. Anyways, I mentioned this in my other video, and I'll tell you what I don't like. Right? Obviously, this long-term chart still looks great overall. We are not on a monthly downtrend as of yet. Okay, and that would take months to develop because we would need to pull back. We need to bounce, set a lower high, and then drop to a lower low, and that would change the monthly time frame and change the monthly trend. This is not a quick process. Like, I don't think we're just going to plummet or something like that. I would highly doubt that, but anything is possible. I mean, we're in unprecedented territory. We're in a different kind of situation here. Anything's possible, but long-term trend still looks okay. Typically, you look for a low to be set, then a lower high, and then a lower low for the trend to change. Typically, that's what you would look for. Now, let's look at a few things. We're starting to get a converging MACD bearish on the monthly. When's the last time that really happened? Back in here, 2018. And it hasn't happened many times, all the way back since 2009. These are like minor crosses, okay? But we don't have a cross yet, but it looks like it's impending and on the way. We have a weekly bearish MACD cross, okay? A little bit of a weekly bear flag kind of over here. The weekly was overbought. The monthly was overbought. We're overbought on the yearly. Look at that, 94 RSI on the yearly. We might have to take that into consideration. At some point, there needs to be yearly consolidation, you know, and sometimes there is. And look back, it's mostly green candles, right? We're not getting the full scope. Look at over here. This is back 2000 to 2012 over here. Look at that. Didn't go anywhere. That was SPY. Went nice up before. Anyways, and look, some consolidation on the yearly. So we might be due for some yearly consolidation at some point, I would think, you know. So that's what I'd be looking for, to be honest. And we're so overbuying my red line strategy. Look at QQQ, way above this red line. It touches it every single year pretty much. And look, we're way above it. So next year, if we end the year, let's say at this level, I would think we get a pullback towards the red line. And that could be a decent decline. It could be another 15, 20% lower just to touch the red line. I wouldn't look for too much more than that unless we have an absolute major crisis. I wouldn't look for too much more than that. If that even happens. Right now I'm bearish. I'm on the bear camp because look at all this momentum the bears have. and we broke this support level on the weekly. On the daily, it's like you got a little bit of a bearish head and shoulders up here, breakaway gaps. This was an unfilled gap. That wick shouldn't be there. It's a glitch. Looks like a little bear flag here. Very bearish. This is what, 3 black crows. I think that's what the pattern is. 3 black crows. My near-term target on the QQQ, I'd be looking for that 346, which is the 150-day moving average. I'm looking towards that level before the next bigger bounce, because we will get a bounce. We're starting to get oversold on the daily. Let's check the 4 hours. Close to oversold, but not yet. Hourly, not oversold. So we're almost oversold on the daily. So sooner or later, we're going to be looking for at least a bounce on the daily. I don't think we're going to get a V shape, at least not yet. See this volume here, and then it broke that low of this volume. That trapped a lot of money that was buying that dip in the red now. And yes, we're getting increasing bear volume now, which is a negative sign because it's not like a big spike yet. If we get another drop and then we get a big spike, then we'll probably see more of a rebound. But this isn't big enough of a spike that suggests we're going to see a reversal yet. So I do think we get more downside. If we do gap down towards this level, let's look at the NASDAQ right now. This is where we are right now in the futures. We're down 0.7% or so. If we gap down around here, maybe we'll get a rebound a little bit upwards of that red line if it's a gap down. But again, I'd be careful and cautious with that because the momentum is very heavy to the downside. So, you know, the saying is, don't try to catch a falling knife. Wait for the clues, or wait for very oversold conditions. We're starting to get there. We're starting to get there. So we will be looking for an oversold bounce within the coming day or two. I would be looking for an oversold bounce, possibly in the morning if we get a gap down tomorrow. That's very possible. I'd look potentially for that. And if not tomorrow, then we'll probably get an oversold bounce the next day if we get another big red day tomorrow. But either way, my target remains the same. I'm looking towards that 345 mark, 346 on QQQ. Looking at SPY, clear bearish head and shoulders up here. Looks like I don't like it. We broke to a lower low today slightly. No follow through. Let's look at it. 428.78 was the low. 428.86. So we didn't break the low by much, but we broke the low and closed right around that area. A little bit of a more volume spike today. It's a little more overextended to from the red line than QQQ. But I would look for that 150-day moving average to be a target on SPY too, which puts us at 423 on SPY. Not like in the chart. We had a long-term trend line. You can draw this on SPY. Long-term trend line broke all the way since the bottom of the coronavirus crash. The long-term trend line broke on SPY. We didn't break it on QQQ just yet. We're right around that mark on QQQ. And QQQ did hold up better today than the other indexes. We're right on that mark with QQQ. Let's look. I have the Dow Jones up here. The Dow Jones broke the uptrend as well. I can go back here. Pretty much this line clearly broke the uptrend. Here it did here, but it was a fake out. Over here, we came back up. We tested it, rejected, and pulled back. So this one is not a fake out, or so I don't think so. We had that clear rising wedge up there, and I pointed that out several times on my Instagram. I'm going to do a quick look at gold. You would think gold might be reacting bullish in time like this, and it's not. I think it will have its time, and this might be an inverse head and shoulders on the daily on gold. I see it very possible. You got high volume spikes at those lows, showing support at the lower levels, trying to form that higher low on the weekly on gold, and we get that higher low, then we could start pushing back up towards 1900 and to all-time highs. This could be a little bit of a double bottom on the monthly on gold. It's possible. So I'm holding a little bit of gold. I got a little bit of physical gold myself, some gold coins, some gold bars. But I might start playing some gold leverage ETFs. There's some on the Canadian market. There's HBU. That's the ticker. It goes up 2 times what gold bullion goes up in US dollars. So it moves 2 times this movement right here. Let's take a look at a few other things instead of making several videos tonight. Actually, I will make other videos if I get the chance. I'm going to leave this video here. I want to take a quick look at oil. Let's take a quick look at oil. Bullish. And what I'm going to say is, you know, that's a monthly. Bull. That's all I'm going to say. Bull flag. Bull trend. Bull trend. Trying for the double top. It's not going to happen. The bulls are going to break that, I think. Bull. Oil. Bull. Silver, yeah, maybe rebound here. Platinum, don't like. Oil, bull. Natural gas, wow. Look at that, parabolic. Starting to break these resistances. Natural gas might push up a lot more. High volume spikes, but it's still looking strong. Lumber. Starting to pick up steam again a little bit. I don't think it's going to be as hot as the other ones. Not too bullish there. Copper. You know what? By looking at this, natural gas and oil look quite promising. And gold, I think it might shine. I'm on the fence about it. I'm not too confident in it, but I think it might shine. Thanks, guys, for watching. Please follow my Instagram at 10baggerstocks. I have a TikTok as well. I'm trying to get started up. And check out my website if you're interested in my course. I mean, it's an amazing course, but it's not just the course that you're getting. You're getting the Telegram group. I'm giving ideas constantly. I'm updating people constantly. We got a group chat going with 500 people, almost 500 people in the group chat. We're talking all the time, making friends. And then on top of that, I got a chat where it's just my ideas. So nobody else can write, just my ideas. And then we got a third chat if you want to join this one as well. And it's all included with the course. One-time fee, no subscription. I mean, I'm giving amazing value here. Everybody else, $100, $200 a month. Anyways, one-time fee. And we got the third group where students, whoever volunteered that they want to do it, they can write their trade ideas as well. So a chat just with my ideas, a chat just with student ideas, and then a chat where everybody can just talk together. And that comes with my course, which my course is obviously amazing as well. Thanks, guys, for watching. Hope you guys have a good night. Check out the links in my bio, or sorry, in the description. See ya.